This is Jonathan Mickles with the Strategic Multifamily Investing Podcast, and today I have with me Mr. Kevin Breckenridge. How you doing, Kevin?
Hey, I'm doing wonderful, Jonathan. I'm doing wonderful.
Excellent. So Kevin and I met a number of years ago, and I forgot how we met, but with a lot of real estate type programs, if you will, in the Washington, D.C. area. I'm pretty sure it was at some sort of real estate investment association. And I found out that he was a realtor as well. And so we formed a relationship back then. So over at the time, he was about to be engaged when we first met, and then he got engaged, and we were working at a nonprofit. Do you remember the nonprofit we worked at, man? That Thanksgiving?
Yeah, I think it was Bread for the City.
Bread for the
I
City.
think that's yeah.
Yep, in the Washington, D.C. area. And I think we were putting together Thanksgiving boxes for those that were in need. And it was great. There's a video out there somewhere that I created. And we're talking, probably a good 10 years ago.
Yeah.
Yeah. How long have you been married right now, man?
Actually, next week we'll celebrate 5 years.
Oh, congratulations.
Yeah.
Congratulations. So
Thank you.
this is probably at least 6 or 7 years ago, probably, I don't know, that we did Bread for the City in the DC area. And we just continue to stay in contact from there. I heard that you were doing a couple of years ago, you were doing some things in commercial real estate, and it just made sense to reconnect here. And so I'm glad we reconnected, man. You're doing some big things yourself. So let's go back to the origin story. How did you get involved in real estate? Was it automatically commercial, or did you start off residential?
Not at all. Not at all. So first, Jonathan, I want to thank you for having me on your show, man. I really appreciate the fact that you have gone through the energy and the effort to put together a podcast to get the knowledge and the information out there. I do a lot of the same and similar things, so I know how much effort it takes, but I also know how impactful it is. So thank you for putting this together and for documenting people's journey, right, as they move throughout life and as they move throughout their real estate career. So for me, my first real exposure to real estate was in 2008. I was an intern. I was an economic development intern for the city of Cincinnati, Ohio. And as an intern, I had two specific projects I was working on. One, I was working with the International Franchise Association. They were coming to Cincinnati. They wanted to put on a big event. So I essentially put together this huge, it actually turned out to be a big success, but put together a big conference with the IFA. They came in, they did a full day of conference and exhibit, just really teaching and educating people about the opportunities in franchising. So that was the first project. The second project was actually working on a very large transformative real estate development project in Cincinnati called The Banks. It was a huge multi-billion-dollar project, and it was one of those once-in-a-lifetime projects that really transforms an entire city. And I'll give you an example. The most comparative example I can think of is the Wharf in Washington, D.C.
Oh, wow. Yeah.
Yeah, this project, yep, it was of that magnitude because it was literally transforming the entire waterfront of Cincinnati at a time when Cincinnati, the downtown area of Cincinnati really became dead. After 5 p.m., it became a ghost town. And so the mayor at the time was really pushing a more progressive agenda for the city. And really a lot of the things that he did and that he was doing was the precursor to the liveliness and the vibrancy of downtown Cincinnati as it is today. So anyway, my second project was working on this Banks project. And at the time, it was right around the time for ICSC. And for anyone who's listening who isn't familiar with ICSC, that's the International Council of Shopping Centers, which is the largest real estate conference, deal-making conference in the world. Yeah. Every year, about 50,000 practitioners, investors, brokers, owners, franchisers. I mean, it runs the gamut. Everyone comes together, and literally they say like 40 to 60% of the year's deals are made at this conference. So it's a very high level conference, very high level opportunity to watch deal making happen. And my job was to help the city package itself from a documentation standpoint, a marketing standpoint, as an opportunity to do business, to package this bank's opportunity as a place to come and open up your business, and then also set up the individual meetings between the city and the mayor himself and the city's representatives through the economic development department to package that up, sell it as an opportunity, and then to set up those meetings. And because of the work that I did, I had the opportunity to actually travel to Vegas, attend ICSC.
Yep. That's
and
where it is every year in Vegas. Yeah.
Major, man. I mean, major. Sit in on these meetings where you're watching in the span of 10 to 15 minutes, you're watching multi-million-dollar deals happen. You're watching transactions happen that affect an entire city, as the city, now has an entertainment hub to come to. So the restaurants that people are eating at, the hotels that people are staying at, I was there watching those deals come together, as well as those deals not happen. There was a lot of jockeying. There was a lot of evaluation. Hey, is this the right type of brand of company that we want to bring to this city, to this downtown area? Does it have the right vibrancy and things of that nature, as well as seeing the entertainment aspect of it, where you're sitting down and you're watching people laugh and have fun and drink and eat and spend thousands of dollars over a lunch, but at the same time they're making big deals happen. So that was my real first exposure to real estate on a high scale. But at that time, I wasn't focused on getting into real estate as a profession, because that was actually my senior year of college. And I was still trying to figure out what I wanted to do. I was a business major. Then I was flirting with the idea of working for government and politics. So at that time, I wasn't really sure what I was going to do, but that was the first real exposure that would really stick with me over time.
So that was, where'd you go to college? Because I was going to ask, how did you get to Cincy? Are you from Cincy, or you went to college there?
Yeah, so actually, I'm from Washington. I was born in DC, but because of my family dynamics, I was back and forth, literally between DC and Cincinnati. And when I was right around 11, I moved to Cincinnati, for good. And I was living with my grandfather and my grandmother, and I was, raised by them partly. So that's how I ended up in Cincinnati. But my first year at college, I actually went to Youngstown State University. I was an athlete. I was a track athlete. And so I went to Youngstown State for a year, which is in Northeast Ohio. I didn't like being as isolated as I was at YSU. So I transferred to UC and graduated from the University of Cincinnati with a bachelor's in business administration.
Well, you've done it up. Now, what part of DC you're from? I would say I'm from DC. I grew up in a little town that's right outside of DC. Some people call it Ward 13, Capitol Heights area.
Cap Heights.
Specifically, Seat Pleasant. Shout out to the mobile mayor, Eugene. Excuse me, sir. Your last name is disappearing from me right now, but he's currently the mayor of Seat Pleasant and has been for a long period of time. Where did you grow up in DC?
Beautiful. So, man, like I said, with my background, I was bouncing, but originally I was right off of South Capitol Street, man.
Oh, okay.
Yeah. Originally, right off of South Capitol. Once I was born, we stayed with some family members actually in the H Street corridor off of K Street. And then moved over to Southeast off of South Capitol. And then from South Capitol, we actually moved out to Silver Spring, Maryland. And from Silver Spring, I went to school in the White Oak area until finally, like I said, I moved to Cincinnati for good. So a little bouncing around there. Also, a little bit off of Rhode Island. Stay with I got two grandmas. So so one of them lived in off of Rhode Island in Brooklyn. So bounced around a little bit.
Yeah, it's very hard to find some people who are actually from Washington D.C. because
Yeah,
it's such a
yeah,
transient city.
absolutely.
Every 4 years you got people coming in and out because of the politics, and then just because of the type of town it is.
Yep.
It's very difficult to actually find people who have lived in and are from the
Yep.
Washington D.C. area. So that's cool.
Yes, sir.
So then
Providence Hospital, baby.
I get you. But how did you get yourself into, I mean, I know that you went to school, for business, but getting into the economic development center, that's some heavy stuff. How did you get that internship? Because I know that there are probably some young people who are interested in getting involved in that level. How did you get involved in that?
Man, a couple ways, honestly, and it's funny that you mentioned that's a heavy hitter and a high level. At the time, I really didn't think of it like that. I was
Right.
moving and shaking. I was doing so much stuff at the University of Cincinnati. I've always been involved. So always been an athlete. When I transitioned to college, I started doing a lot more social activities, fraternities, and different clubs and things like that. And then I was very plugged into what was happening through the universities, the College of Business, what was coming through the career department at UC. So one, being very connected to groups, being very connected to information, and being very connected to people. And so one day I was on my email, checking my email, and I saw an email come through the UC career department, and I clicked on it because at this time I was getting ready to graduate. I was about 6 months from graduation,
Mhm.
and like I said, the first half of the school year I had been doing formal interviews on campus.
Yeah.
Really trying to find. When you go to college, that senior year, it's all about, okay, you got to find that that job post college, and there's all of that pressure. So I was in that mode looking for opportunities. And when I saw the email come through, it said economic development intern, but it was actually out of the mayor's office, not out of the economic development office, which they're both in the same building on the same floor, but it was actually working for the mayor out of his office. And lucky enough, my fraternity brother, who actually came, I'm an Alpha
I was about
Phi.
to say, we're fraternity. You got to shout out your fraternity.
Hey man,
Oh
absolutely,
six, huh? Oh
absolutely,
six.
absolutely. So what they call my Sands, who I came into the fraternity with, he's a political heavy hitter. He has been for a very long time. And at the time, he was working for the mayor in the mayor's office. And the mayor's staff was only actual office staff was maybe 5 people. So as soon as I saw that email, I followed the instructions. I put together my cover letter. I made the edits to my resume. I sent it in, and I hit him up immediately. And I said, "Look, man, there's this internship down at the mayor's office. I just sent in my information. I just wanted to let you know, brother, if it's anything you could do for me, man, I'd appreciate it." And within a matter of days, I had an interview. I went down, did the official interview, and within a week or two, I was offered the internship, and the internship was set up specifically for those 2 projects that I mentioned, and of course, I had the skills, I had the experience. I was, like I said, I was a business major at this point. I had already traveled the world, doing
Really?
doing school, what's it, the school study abroad programs and things like that. So I had a lot of skills to back it up, but nonetheless, I did kind of, leverage that existing relationship as well.
Absolutely. So there's a lot of things here that you've mentioned, and someone said success leaves clues. So
Mhm.
for somebody who's like, well, how did he get into? Because we're going to get into your background now in the commercial real estate field, but
Mhm.
how did they get started? You heard there were a lot of different things that he overcame. He went to school on a track scholarship, but he didn't let the athleticism be the only thing that he was to be known for. He went into business, right? He started doing a bunch of things there. He got connected. He got connected to Alpha Phi Alpha, right? And there was a relationship there where he leveraged his network. Some people say that your network is your net worth. And sometimes you just need to call your net work. I'm talking to myself here, and and I'm starting to do that. As many of you know, it just takes me a long time because relationships take a little bit of time. You know, you got to know, like, and trust somebody in order to do business with them and, work with them over time. And so, Kevin, you've been able to do that. That's awesome. There was one other thing. You mentioned ICSC. Have you worked with Project REAP at all?
I'm definitely familiar with Project REAP. I never applied to be
Okay.
a part of the program, but no, I'm definitely familiar. I've known people. I think you went through Project REAP
I
as well.
did. I
Yep,
did. I
yep.
was
So
class of 2014 in
yes,
Washington,
sir.
D.C., Project REAP. The reason why I was saying is because at the time, the advisor or the director for the group was employed by ICSC.
Oh,
And
okay.
they allowed students for, like nominal fee, if anything, to get out to Vegas. All they had to do is just pretty much get out to Vegas and take care of themselves, and they could go to the conference and actually
Mhm,
see and interact with other former people. So
mhm.
Project REAP, just for those who may be listening, is a organization developed to increase minorities in commercial real estate. Not necessarily multifamily. It could be in, uh, all types of commercial real estate. So if you're interested, there may be a chapter in your area. Go to I think projectreap.org, REAP, projectreap.org, and that will help you do that. Now, you're now in commercial real estate. How many years do you have right now in commercial real estate?
Yeah, so that's actually a great question. So before we get there, I just want to
Oh,
clarify one
sure.
thing.
Mhm.
I actually didn't get a scholarship to run track. I was a walk-on. I was a champion, and I walked on to Youngstown State. And part of the reason why I left is because they wouldn't give me a scholarship. After we had set school records, we set conference records. I was a champion, league champion, and they still wouldn't offer me a scholarship. So that lessened my incentive to stay at YSU. But
I understand.
nonetheless, it's a great, a great lesson there, that sometimes you adapt, sometimes you change, sometimes you make decisions, and you never know how that path is going, where that's going to lead to. But it's one of the most interesting decisions that I made. But ultimately, I am more than happy with making
Absolutely.
that decision in the route, that it took my life in. So
Yeah.
but
So what track and field meet would you run? Did you run, or were you shot put or
No,
javelin?
no, I was a runner. Yeah, I was a
Okay.
runner. By the time I was in college, I was mostly focused on the 400. Funny enough, the hurdles, 300 hurdles, 400 hurdles, and the 4x4. The 4x4 and the 400 were my two main focuses, man. Yep.
Cool. All right. Well, I was not a part of a fraternity. I was kind of me fi me
Yes,
until
sir.
I got to grad school, and I think it was grad school when I became a part of Upsilon Pi Epsilon, the Computer Science Honor Society, and I became
Okay.
so
Perfect.
I'm
Perfect.
Mr. Upsilon, if anybody's out there who understands that. Um, Nonetheless, I had another question I'll get
Oh,
into a little bit more because it's really connected to, how you got your pivot
yep.
to multifamily. So you moved back to Washington, D.C. some years, whatever, and you're there and you wanting to get involved in real estate. How did you pivot from like business to
Yep.
now? I do want to get into real estate. How did that happen?
Yep. So actually, I went. I stayed after I graduated. I stayed in Cincinnati a year. Decided the job that I had taken after the mayor's office. Ultimately, I didn't really like it. I was working for a very high end commercial printer in their management rotation program. Didn't like the industry. Didn't like where I was working, and I was
Hold
looking
on,
for more
printer? Hold
opportunity.
on. You said a printer, right?
Yeah,
So
but
you're talking about champion.
I'm talking about very high quality printing for
Oh,
Tiffany,
okay.
Harry Winston. I mean, very high end, high quality. But it was at a time when definitely when the industry was changing. and changing from, print to digital. And you were really seeing that in this company that had been around for a long time. But anyway, I went off, I left that company, and I decided to go to Korea to teach English. I had some friends teaching English in Korea. So I went to Korea. I taught English for a while. But while I was there, I was trying to figure out, okay, Kevin, you just graduated. You're already on your second job, out of college. What do you really, want to do with your life? What do you really want to do? And, I thought about it. I did all the career assessments and, asking all the career questions. And one of the questions was, well, what do you like to do? And, who are you? What do you like to do? What type of environment do you like to work in? And so I really thought about that. And I looked back over my life, my different work experiences. And actually, before I left college, I wanted to be an event planner. I started a business throwing parties and hosting events and things like that. And I actually thought about doing that. But I realized I didn't ultimately want to do that. But that type of putting things together, connecting with people, bringing people together, that collaboration, the dynamics of, getting out of the office, being out of the office, all of that type of stuff was important to me. And then the exposure to real estate that I had at ICSC really is what tipped the scale, because I thought about what my long-term goals were. My long-term goals were to be wealthy, right? To be rich, to be wealthy. And coming from a background of poverty, and reading the statistics, reading the information, and knowing from, third-party verification, like your Rich Dad, Poor Dad, that most people, right? I'm 5'3", 5'4" on a good day if I got the right shoes on. Although I was a great athlete, I wasn't going to the league. I didn't have the mindset of becoming an Olympic champion. And then even finding out that Olympic champions don't really make a lot of money, right? So for me, the logical decision was business. And then having the opportunity to meet my first billionaire during ICSC, right? And the guy, he was a normal guy. He had on a suit, open collar. We're at a random nightclub, and I didn't even know he was a billionaire until after having conversed with him, shook his hand, shared a drink with him. And the late legislative assistant I was with said, "Hey, he's like a billionaire, right?" So, so having some of those exposures, I was like, you know what, man, I'm gonna try this real estate, and I'm gonna figure it out. I didn't know what I wanted to do in real estate, but I was like, I'm gonna try real estate, and I'm gonna figure it out. So when I came back to the States, I was 100% focused on real estate, and based off of my research, the easiest way for me to get in and where I saw the opportunity was to become a real estate agent. And so as soon as I got back to the States, I relocated back to DC, and I immediately signed up for a real estate course and started going down that path of becoming a real estate agent, and then became a real estate agent in DC and Maryland and Virginia. And then everything just kind of organically happened from there. And my main goal at the time was to just learn as much as I could. I did not have a singular goal. My goal wasn't to, make $1 million by this time or to have this type of business. I just wanted to learn and become a student of the game. And I figured that over time I would kind of navigate and to find my way. And ultimately, that's ultimately what happened, and how, we both ended up here today having this type of conversation, because I was able to find what I ultimately wanted to accomplish and how I wanted to do that. And that ultimately led me to multifamily real estate, and particularly focusing on the commercial real estate space.
Got it. So you're doing real estate syndications right now, or are you pretty much taking down things yourself?
Yeah, so I've actually, the majority of my experiences in the residential sector, and that's how we met. And while doing the residential piece, the brokerage, the wholesaling, working with investors, I worked with a lot of investors, and I mentioned this in my bio. I helped a lot of investors repeatedly make six-figure returns. And as I was going through that process and that learning experience, I thought I wanted to be just the developer, right? I was like, okay, I started off as an agent. And I'm like, okay, great. I'm a real estate agent, this is actually a great lesson in how you title and how you label yourself. One of the things that I learned being a real estate professional, right? You're diving into the world of entrepreneurship. If you don't know that, you definitely are diving into the world of entrepreneurship, and that gives you a lot of power and a lot of responsibility, which ultimately can be harmful, but it can be very beneficial. And at different times, it's going to be both. But one of the most powerful things is the ability for you to be able to elevate yourself professionally, personally, and financially. And so as I was matriculating through the levels, how I labeled myself determined my point of view and the opportunities that came my way. So at one point, I labeled myself as a real estate agent, and that's how I thought, that's how I operated. And then at another level, I labeled myself as a real estate broker, and that's how I thought, and that's how I operated, and that determined the opportunities that came my way. And as I was matriculating through those levels, agent to broker, I then saw, hey, I'm helping these guys make a lot, guys and gals, right? Men and women. I'm helping them make a lot of money. And yes, I'm getting great commissions, right? Don't get me wrong. I'm making great commissions, but when I see that 6-figure settlement check, they're making good money too. And so I was like, hey, I want to become a developer. And that was my thing. I love development. I love the development process. And so ultimately I became a developer. But in that experience, I realized something about development that was a hard but very important lesson to learn. And that was development has no existing income stream, right? There's no existing cash flow with the real estate development project. And so there are a lot of implications that come with that. And through those implications, through those learning lessons of being a developer, of having difficult deals, of experiencing what it's like to have more money going out than what's coming in, and waiting for that big check, that's what actually forced me to pivot to something that made more sense, especially from a syndication standpoint, because I was syndicating investors' capital in development deals that ultimately were rewarding, but the risk level and the risk tolerance
much higher
for you as the syndicator, for you as the investor who is bringing investors' capital together. Yes, you can make a lot of money, and yes, you can have a lot of success in development. But when you're dealing with other people's capital, you have to be able to find the right balance and risk tolerance to ensure, right, the preservation of investor capital as well as the return of investor capital. So in 2018, around the middle of 2018, that's actually when I really seriously started considering multifamily. It's funny because you had asked me a couple months ago, you're like, man, I thought you had gotten into multifamily before that. And it's funny because I had forgotten all about it, but I had taken a look at multifamily before, and I started going through the education and packaging deals. But when I look back on the knowledge and the experience that I have now and where I was at the time, I wasn't ready. And that's why ultimately I never moved past having a few meetings here, building, starting to build a team there, because I wasn't ready. I was focused on all these other things, right? I was doing wholesaling, I was doing retail brokerage, I was doing development projects. I was, I was doing too many things before I had the level of experience to be able to handle and to manage all of that. So to answer your question, in 2018, I stumbled across Rod Cleef. And
yes, I know about. Okay, he's a big name in space. Yeah,
absolutely. Stumbled across Rod Cleef, and me and a couple of actually some agents that were with my brokerage, we decided to attend his conference in Chicago. And I'm sitting in this conference, the boot camp, a 3-day boot camp in Chicago. This was August of 2018. And I'm sitting in the boot camp and I'm looking at all of this information. And of course, I've got all of this prior experience. And I'm like, this is it. This is the perfect investment vehicle that provides the most, in my opinion, the most amount of balance, the best return, and ultimately, which is being proven during this pandemic, the most security. And especially again, if you're talking about syndication, it provides the highest level of security when it comes to, at a minimum, the preservation of investor capital, which is the number one priority when it comes to syndication, when it comes to investing and using other people's
Yeah,
capital.
absolutely.
So
So I'm
yep. So
sorry,
from
go ahead.
from that time frame, that's when I really decided, okay, I'm done with residential. I'm done with brokerage. I'm done with wholesaling. I'm done with everything. I'm pivoting and I'm specializing and I'm focusing on multifamily and I'm focusing on commercial. And that's really where the major shift and pivot happened for me. And that led to where we are today. So I can talk about that a little bit more, but I kind
Sure.
of got a little long-winded. So let me.
No, that's fine. Again, success leaves clues. A couple of different things you mentioned in there. Preservation of capital. Rule number one in business is lose no money. Rule number two is lose no money. Rule number three is lose no money. So the initial capital that somebody invests, they should be able to at least get that back, if not more. Also, to understanding risk tolerance is another big thing. And a lot of times when I'm talking with new potential investors, I ask about what is your risk tolerance, high, medium, or low, what type of things are you interested in, and that's important. And if you want to know, that questionnaire that I use, go over to Kim Lisa Taylor's website. Kim Lisa Taylor is an attorney, syndication attorney. And we did a podcast with her before, and she has a questionnaire that you could use, if you will, with your syndicators that you're speaking with. And another thing that you mentioned here was that not to focus on too many things. And I think that it is a recipe for disaster and danger. When you're very talented and gifted, right? You can do a lot of different things. You were doing event planning, teaching English in Korea, track athlete, business with EDC and ICSC. And, you obviously can float in a lot of different areas, but if you continue to focus on all of those things, it's a recipe for disaster. You have to focus your energy and focus your talent. Can you do multiple things? Absolutely. But try to at least get something up and running that can sustain you. And obviously, as you mentioned, multifamily, at least here for a lot of people, has been one of those things that has been a surprise. That, even in the pandemic, with what's been going on, some people say, well, it's been propped up by the government. It's this, that, the third. It's going to crash. It's going to continue to stay. Whatever it is, at this point in time, being a year in, and we're recording this in May of 2021, it continues to do what it's supposed to do. So again, focusing on too many things is an issue, is a problem. So now you've made the decision that you wanted to focus on multifamily. You've gotten some mentoring through Rod Cleef. Did you continue mentoring with him, or are you connected with his group anymore, or have you now gone out on your own?
Yeah, so not formally coached by Rod Cleef. He's got some hefty programs, but I am a student of a number of top syndicators, from Rod Cleef to Brad Sumrock to Joe Fairless. Just really, again,
Hold on, you haven't mentioned mine. There's Michael
Mr.
Blanc.
Jonathan
Michael
Mickles,
Blanc.
Mr.
Michael Blanc.
Jonathan
You
Mickles,
can't.
the Red Boot LLC, absolutely.
No, not me. Michael Blanc. Michael
Oh, Michael
Blanc
Blunt.
is,
Oh no,
yeah.
absolutely.
Michael. He's from he started in the Washington D.C. area, actually Northern Virginia area.
Mhm.
And funny story, I met Michael before he started doing apartment syndications,
Wow.
because I was an agent trying to chase his fix and flip business.
Yeah.
But he had multiple agents that were working with him, and wasn't able to do that. But I was, at the time, taking some additional certifications and actually started teaching a little bit for the Sharfin Institute some time ago. Probably 2010 or so, when I was doing that. And when I got back and, just kept in, communication, relationships, right? Then I reached out to Michael, and that's when he was starting the syndicated deal analyzer and starting the ultimate apartment course. So
Wow.
this is just kind of how things happen when you keep in relationship with people. That's important, right?
Yeah.
But let's get back to you. So you haven't necessarily formally gone through those, but again, you've had a bunch of other experience in syndications before, because we're doing development there for a while, and so you're back in DC. What's now the impetus? How where are you pivoting right now? Where are your markets that you're interested in? And yeah, let me start there. Where are your markets? Let me just rapid fire you a little bit.
Yeah. I was gonna say you already hit me with a couple. So yeah, definitely. I definitely want to just say yes. Focus, man, is extremely important. And one of the gifts and the curse of being an entrepreneur and being entrepreneur minded is that, again, you can do a lot of different things. There are a lot of shiny different objects, but if you can focus on that one, and what I'm really seeing is it's hard for people, even successful people, to focus on one. And if you can focus on one and run that deep, man, there's very little that you can't achieve and that you can't accomplish. But as far as the syndication, so after really taking all of the information and the opportunity in multifamily and deciding that that's what I wanted to do, I had to take some time to wind down from my residential business. I had to take time to learn, really intimately learn the multifamily space.
How did you learn? Where did you go other than Rod Cleef's boot camp?
Yeah, absolutely, man. So of course there are a ton of podcasts out there. This is a great example of how information changes, exchanges. And when you're talking about pursuing investments, when you're talking about real estate, this is a business where you have to self-educate. And this is not, a formal university environment, right? This is something that Robert Kiyosaki talks about. If you want to become wealthy, you go to seminars, you go to boot camps, you read books. It's a different type of learning. So
somebody said university should teach you how to learn, not necessarily what to learn. Absolutely. So if you figure out that, okay, I learn better by being in classroom, then that's the way you structure whatever your learning is post, university, right? If you learn best by, kinesthetic, meaning I got to get my hands on it, then you structure your learning that way. But yes, what are some of your favorite podcasts that you listen to going through this?
Yeah, absolutely. I by far, man, I have to say, between Rod Cleef and Joe Fairless, they have provided an abundance of information. But there are so many out there. There's Jake and Gino with Wheelbarrow Profits. There's even Michael Blanc. I've learned a lot from Michael Blanc. I've studied all of his materials. So there are a lot of great educators out there. Brian Chavis. There are a lot of great educators out there that provide a lot of information. And again, being married to real estate and having so much experience in real estate, there are different nuances and different pieces of information, that I had to bring under my umbrella.
Can I give a shout out to one more? What just came to mind? The GOB Network with Jim Biggs out of Chicago. Okay. The GOB Network. One of his thought process is, there is a lot of people who, there's money that you're going to have to be, in order to be a part of, the mentoring that's there. And he's setting up an open source kind of environment. And for those who don't quite understand open source, means it's free. For the, it's the cost is your involvement in the group, and as long as you're involved in the group, you can reap the rewards of learning, etc. So check out the GOB Network with Jim Biggs in Chicago if cost is an issue for you not to be a part of some of these other programs. I'm sorry, go ahead, please.
Oh, no, absolutely. I definitely check out the GOB Network. So of course, a ton of self-education, the prior real estate experience, bringing some of those new skills under my belt. But one thing I've learned over time is the value of patience and not rushing, right? And so my approach was, instead of me going out and trying to immediately raise capital, and I can talk about that in a second, but instead of immediately going out trying to raise capital, immediately going out trying to acquire a deal. Where I was in my space mentally, physically, emotionally, spiritually, and all the things that I was transitioning through, I felt more comfortable taking an education-based approach in terms of how I approach the market, where I was able to now become more of a teacher of real estate, right? Real estate principles, investing principles, mixing in the multifamily, building a bigger multifamily network where I can bring people in to teach and to educate, and to build a community and foster a community of people who come together, who learn, who network, who build relationships, and who ultimately do business. And the
So
reason why,
you took all the education that you had learned and you turned into an educator of sorts to the community that you already had developed or that you knew. And so where is your community right now? How can someone find your community?
Yep. So it's a community that I've started from scratch. When I decided to pivot, I decided to be, again, extremely focused. So instead of reaching into my contact base and adding every contact I ever met into this community, I built it organically and I built it from scratch, specifically focused on multifamily, so that the attraction process is attracting people who are attracted to what the mission of this, this community is.
And where can they find this community?
Yeah, absolutely,
Okay.
absolutely. And so the backbone of that community starts off with my email list. You can join my email list by going to my website. That's kevinsbreckenridge.com. And then the backbone to the email list is the Facebook group. The Facebook group is called the Multifamily Investors Collective. It's a group that you can find on Facebook, and that is the core function of my community. But again, the goal and the purpose is to foster the business relationships, foster the personal relationships, because as you know, Jonathan, when you get to this higher level, right, I could easily have gone out and said, okay, I'm going to raise $1 million and I'm going to acquire a $2 or $3 million project. Right. But just like you have a ton of new people getting into this business. Yeah. Because we're dealing in businesses themselves. It's almost like a startup community, right? There's all this excitement when you first get in and when people first get started, but how's the performance of that asset and how's the performance of that investor and that investor group over time? It's the same way with startups. Over time, a lot of startups end up failing. A lot of investor groups can end up failing. A lot of partnerships can fall out. So knowing that, having experienced various degrees of that, my approach was, hey, I want to go deep with my knowledge. I want to go deep with my relationships. And I really want to make sure that the people I'm doing business with that relationship is properly set on a strong foundation, right, as well as my understanding and my skill and my ability to invest in this asset class at this level.
Sure. So let me go back. There's something that you did that I didn't do, and it makes sense. You said instead of going and adding your entire database to create the community, you created the community and then let there be an organic thing in terms of Facebook, or in terms of your mailing list and your website. How did you drive people if you're not adding people from your initial database to your group? Was it just started primarily as a Facebook group and then kind of went up from there, or how did it go?
Yeah, actually, the Facebook group was actually the last thing. What I focused on first was the email list, and literally through connecting with people in specialized groups on Facebook, through multifamily property owners that I know and that I've reached out to, through industry contacts that I've met over time. That's kind of how I started the list. And then over time, as I got more into the teaching and understanding the asset class and doing more teaching, I started putting out more information between the interviews that I do. I've written some ebooks. I have a newsletter, right? The newsletter that goes out every week. So I've used the different components to start to build that that email list. And then as I was building the email list, I brought in the Facebook investor community component to, to bring that cohesive and that interaction there. But yeah, through a variety of different ways. But again, focusing on making sure that it's multifamily specific.
What about right now, the the markets you're in right now? Where are you right now?
Yeah, so market wise, I'm focused on particularly the Cincinnati area. Cincinnati is a great market. It's a market that I know. It's a market that I have a lot of contacts in, but I like the Midwest. I'll name a couple markets. I've got a top market. And then from there, you have a tiered list of markets, but
Sure.
I like the Cincinnati market a lot. Ohio, really, I mean, and there's different angles of how you invest, but Cleveland, I like Cincinnati, which includes the Dayton area. Columbus is a very strong market. I like Tennessee. Memphis is a good market from certain angles. The Atlanta market is a very popular market. I actually like the Baltimore market. And from a broker standpoint, we haven't touched too much on that, but I am focused on multifamily brokerage as well. And from a broker standpoint, my primary focus is the Baltimore area, then bringing that down to DC. But I like the Baltimore market for a lot of reasons. Let's see, Jacksonville, Florida, different markets in Florida are very active and very popular. I like North Carolina. Some markets in North Carolina and some sub-markets outside of Atlanta. So, I literally study, the entire country, and on a frequent basis, I'm cycling through different markets to see what's happening.
Good. So then what are you using to do your market analysis, may I ask?
Just raw research. And by raw research, I mean literally diving into picking a location on a map or from a list, diving in and doing that ground level research. What's the population? What is the population trends? What are the job trends? What is some of the economic development news happening in that community? And then also looking at the deals specifically. What cap rates are they trading at? What are the occupancy rates? So literally just digging in and doing a lot of that raw research to get a lot of that raw on the ground data.
Where are you getting your research for cap rates? That's a very good one right there.
Yeah.
Historic cap rates. Are you talking to property managers or specifically that particular one? I'm interested in how you find that.
Yeah, so cap rates, you actually can get a lot of cap rate information from a good, thorough offering memorandum, whether that's through LoopNet or through a private broker. And one of the ways to see what the cap rates are in terms of real time is looking through the deals as you look through them. So say, for example, on LoopNet, there might be 5 or 10 deals on there, and they're publishing what the cap rate is, or you just kind of see it from the different information channels, whether it's other educators, whether I'm on a lot of broker lists, so I'm getting deals from brokers all across the country, because again, I'm looking as a broker and as an investor. And so I'm seeing and keeping, this trajectory over mine. You're looking at markets over time. You're seeing how the cap rates are moving, how the cap rates are compressing. And then there are different studies, market reports. CBRE has a lot of good information that they publish. They probably have the top research house in terms of in terms of real estate, period. You got Marcus and Millichap. Yep, you got Marcus and Millichap. So using a lot of those industry real trends, and there are just a lot of different resources where you can get that cap rate data.
Got it. Okay. Well, look, man, we have been talking for quite a while here, but what I want people to do is be able to follow you or connect with you at some point in time in the future, trying to figure out how to do that. How do they connect with you? I think you gave us some of that information before. Could you cycle back through that for us again to make sure that people can get in contact with you?
Yeah, absolutely. So you can find me on the World Wide Web at Kevin, S as in Sam, Breckenridge. That's BRECKENRIDGE. It's a long one.com. You can find me on all major social media channels: Facebook, Instagram, YouTube, Twitter. LinkedIn. You can find me by name. That's Kevin S. Breckenridge, or you can find me by my social media handle. That's at Legacy in Motion, but it's spelled LEGACIN in motion, INMOTION, Legacy in Motion.
Excellent. Well, listen, thank you so much, Kevin, for taking the time out to speak with us today and let us know how we can get in. I think this would be really, really good for somebody who is, maybe doing a bunch of different things and recognizing they need to kind of focus their energy or trying to figure out how to overcome some challenges to make it happen, and really get involved with a community that, they can know, like, and trust, and that can know, like, and trust them as they continue to move forward. And I just want to say thanks again. Congratulations again on your newborn. Hold on. They're about 1 year. Is your child, how old is your child right now? It's about.
She just turned 1. Well, now I say just, it's crazy how time flies, but she turned 1 almost a month ago. So she's almost 13 months now.
13 months, man. I was thinking newborn. It's not newborn.
Yeah.
13 months. Congratulations on that, man. And listen, if there's anything that we can do for you here at Red Boot, let us know. We'll be right there. Okay.
Okay, man. I appreciate you. Thanks again, Jonathan, for the opportunity.
Thanks, Kevin.